Hello, welcome to the ESS BIZTOOLS Accountants Minute podcast. I'm Peter Towers, founder and managing director of ESS BIZTOOLS. Welcome. Supercharge your firm with financial forecasting. This is a very important component of the service delivery that accountants, bookkeepers, business advisors can make to assist your SMEs in their business operations. Because SMEs often struggle with financial planning, business scaling up, and long-term sustainability. They're not accountants or bookkeepers or financial advisors, most SME operators, or if they are, they probably haven't got the time or the inclination to be going back onto the tools, as it were, to be attending to all the accounting functions. That's what they talk to you for. And I think it's a reasonable expectation that a business operator can have that if they have consulted a professional, you will outline to them the type of system that they really should have. And I don't think you should be pulling any punches on that. The failure rate is enormous. SMEs are struggling around Australia. And I think one of the key reasons, besides the interest rates and the inflation and the pressure that SMEs are feeling from the government, employing thousands of more people and putting on more people trying to create some activity in their lives, supervising what SMEs are doing. I really don't know what that's all about, but it seems to be happening. So where do we start? If we are going to be the key advisors to SMEs, I think we start with a business plan. That should be the starting point for every business, from very small to very large. And the business plan should be either prepared every year or prepared for 2 to 3 years and then re-evaluated every 12 months to make sure everything that's in the plan is still relevant, hasn't been changes. Because SMEs change fast, but that is not a reason not to prepare a plan. I hear at times, well, it's all going to change so quickly. That's not what it's about. The plan is setting out a strategy. It's a bit like a map for a tourist. If you're going to go driving from Queensland across to Western Australia or up to the Northern Territory or even down to Victoria, you need a plan. Where are you going to stay? Which highways are you going to take? What scenic locations do you want to stop at? Which friends do you want to meet up with? Which favourite golf course would you like to go and play at? And so on. So business planning is a must for SME growth. And it's not just for startups. Most SMEs lack the time to be able to prepare the business plan on their own. But I'm not suggesting that you go off in your office and just sit down and write a business plan. That's not what it's about either. Because we want the owner, the manager, and the leadership team of the business to have real ownership of the business plan. They will only get that if they have been involved in the deliberations that went into framing the business plan. And that's important. So the ESS BIZTOOLS package on business planning is set out on the basis that you have got various questionnaires. There's 40 of them that you can sit down. You can talk about customers, sales, the team, the suppliers. There's questions. And you coordinate those questions being discussed with the leadership team, and you're taking notes. And out of it, I see your role is to frame the business plan, to prepare it in draft form, take it back for further discussion. Because when it's finalised, I think the leadership team should be signing off on the business plan because it is their document to implement. It's not yours. You may well be part of the leadership team from the client's point of view because you're supplying the virtual CFO service, but you're not the only member of the leadership team. So the sales manager, the operations manager, the marketing manager, and the general manager owner all need to be involved. Otherwise, it won't work. Otherwise, it's just another group of papers that are taking up room and making a mess in the office. It should be a living document. It should be a document that's referred to each month to the action plan. What were we supposed to do in this month? Have we done it? Why wasn't it done? When's it going to be done? Who's going to do it? These are the key questions that need to be looked at. And once the business plan's finalised, we can then move into the predictive accounting reports. These are the budgets, but for each business operation, not all consolidated into one, because it loses its significance if it's consolidated back into one document. Because you haven't got the individual forecast results that you could be comparing to the actual, which obviously also should be prepared on an individual business activity basis. Now, if you want to have a consolidated budget prepared at the end of the process, you can do so. If you want to have a consolidated profit and loss account at the end of the year, you can do so. But the purpose of all this is not to please the tax office to give them certain figures for the tax return. It is to help your client survive and thrive. And they need the reports segregated into individual reports so that there can be realistic comparisons made, so that the key performance indicators and the other business metrics can be made to really mean something. So the second component is the key drivers. The key drivers are the key sub-accounts, things like raw material inventory, completed product stock, debtors, creditors, capital expenditure, research and development, export market development, clients planning to develop overseas. And there can be more. There can be the production planning. The reason is that the expenditure in those items is then able to be clearly identified. And at every month, there can be a calculation made in the budget process as to what is the investment going to be in these various items, whether it's debtors, and then what is the debtors days outstanding. So you've got a business metric that you can compare the actuals to as we go through the year. Because the process is not to just produce a document that says this is how we are going to perform over the next 12 months. It's also to play a very important role in being able to do a comparison. This is what we thought we were going to achieve, and this is what we actually achieved. And what was the variation? Why was there a variation? What went wrong? The art of accounting is to help people in business plan what they want to achieve, then record what actually happened, and then tell them where it went wrong in the figures. The accountant might not know what caused it to go wrong, but you will be able to say to your client, we budgeted for a 38% gross profit percentage. This month, we've only achieved 22%. There's a 16% variance, quite considerable. There needs to be a review to find out what went wrong, what's caused that, to make sure that that problem does not continue every subsequent month of the financial year. And if it does that, it's probably going to continue for at least 4 or 5 months into the next financial year, because if they're relying on the tax return preparation process for this sort of identification, it'll be 4, 5, 6, 7 months after the end of the financial year before you get round to analysing that, won't it? And there's a lot of money being wasted, potentially. So that's the purpose of these documents. Then we go into the cash flow forecast. Now, the cash flow forecast is a very important document because this is then going to have the results of the performance in the various operational activities. Then what's happening in these key drivers is the investment in inventory increasing. Why is it increasing? It's because of the delays in receiving imports from overseas, perhaps because of the wars in Europe and the Middle East. Or is there other reasons? Has the debtors figure blown out? What's the debtors days outstanding? What did we originally budget? What is it now? These documents raise a lot of questions. So the cash flow forecast is going to enable you to sit down with the leadership team and inform them that based on the forecast, in 8 months' time, we've got a real problem. We're going to be short of cash. How much short? Might be a couple of $100,000, might be $1 million, could be more. And then the big question is, what do we do about it? At least the company's got 8 months' notice. How are we going to fix it? Now, you could then indicate, well, there are opportunities for private companies or unlisted public companies to be able to raise capital from the market these days. We've had Section 708 of the Corporations Act for about 40 years. And then 8 years ago, when Malcolm Turnbull was Prime Minister, the Liberal government introduced crowdsourced funding, equity raising, and early stage innovation company capital raising, which are very beneficial. Unfortunately, not enough people know about it, either of those. A lot of people don't seem to know much about Section 708 either. And that's a shame. Because if we're really going to service our clients, we need to have familiarity with these processes, legal processes. Someone said to me recently, is that legal when I talked about crowdsourced funding, equity raising? I said, well, it's an act of Parliament. In fact, there was an amendments to the Corporations Act. So, unfortunately, there is a lot of people in positions that should have a knowledge of these things that don't seem to have it. And then we go into the projected balance sheet. Now, the projected balance sheet enables you to be the commentator on what's going to happen in this business. Because you can say that if we can achieve this sort of performance in our sales, our gross profit percentages, our control of expenses, we can generate this net profit, we pay, here's the tax payments we're going to have to make. In 3 years' time, this will be the financial position of this business. And you can say to your client, is that the position you want to be in 3 years' time? Your client might say, no, I thought it'd be a lot better than that. Maybe you forgot about paying the tax. But you can then sit down and have a real conversation and they can determine it. So the key role of the predictive accounting reports is that they are the financial interpretation of the business plan. They go together. The crowdsourced funding equity raising that I just briefly mentioned is another activity that you might consider. As long as your client's turnover internationally is less than 25 million Australian dollars, the gross value of assets owned by the group is less than $25 million, the company is not listed on a stock exchange anywhere in the world. Now, the structure of the company can be a private company or an unlisted public company. And there's a real process involved there. They will need your assistance to be able to do anything about this within the ESS BIZTOOLS product package. Obviously, in addition to material to assist you to prepare the business plan in conjunction with the client's leadership team, to prepare the predictive accounting reports that I just referred to, we also have a full product package on the crowdsourced funding equity raising. In the first instance, you will need to brief your client how this operates. What are these people who have got this fancy title of the crowdsourced funding intermediaries? What's their role, duties, and responsibilities? You can sit down and explain all this to them. Now, if in the past you have basically been the preparer of your client's income tax return, you are definitely going to go up the ladder as far as they're concerned on the advice that you can give them in their business. Because now you're helping them solve a cash flow problem. by seeing if you could raise some money with crowdsourced funding equity raising. Research and development is another important area because thousands of SMEs undertake research and development each year. But I'm always amazed when I talk to accountants and talk about research and development, the number of times I get a frown and, oh no, we don't do that. Well, there's SMEs undertaking research and development, and some of them are undertaking it not in the right structures, so they're not operating as a company. So they miss out on the taxation benefits if they're still a sole trader or a partnership. And others don't know that you have to spend $20,000 in the financial year on legitimate research and development activities. And a lot of them have got no appreciation that they need to keep detailed records. But we've covered all that. We've got a complete system prepared. We've even got some very large top 100 accounting firms subscribed to ESS BIZTOOLS to get access to our research and development product package to assist them to advise their clients. And this could be the start of the innovation journey, you working with a client who is undertaking a research and development activity. So it can be exciting type of work. You won't hear whinges or complaints from your accounting team members because they will be undertaking interesting and challenging work. And that's a big issue with a lot of firms, isn't it? This problem of talent attraction and then talent retention. You might attract someone, but unless you have interesting and challenging work for them, you'll probably find that they've left you. Succession planning is also a very crucial matter which we discuss in this package. Succession planning applies to businesses at all levels. It's not just the CEO or the owner. It's the other leadership team members, but it's people way down. Can you train and promote and motivate people within the firm? Because unless you need an outside specialist brought in for a new position, it's great if you can develop your own people. So all of these activities that you can help deliver for your clients through the services that ESS BIZTOOLS have developed. And you can put a lot of these into action very quickly because you've got the papers and articles and checklists and forms and videos that we're prepared. We've got some seminars on some of these subjects. There's 40-odd seminars that you can use, present, put your name on them, run the presentations, present by, like we're doing now, via Zoom. Or you could look at having an actual seminar in your boardroom. I mean, people come along, so you could be sitting talking to them before the session and after the session, getting to understand how that client operates. This is the way you need to act if you're going to be an ongoing success in the delivery of advisory services. So this is the overview of the financial forecasting product package, which was summarized in edition 396 of Accountants Minute. If you wish to access Accountants Minute on a regular basis, please go to our website, www.essbiztools.com.au, and click on to Accountants Minute and register for receipt of the editions of Accountants Minute, which are currently being produced weekly, because there's a lot happening and there's a lot of challenges out there for your SME clients that I think you need to respond to those challenges and supply those services. And we set our target of looking at every conceivable business process that an SME could ask in the financial, commercial, management, accounting areas. And we have either already developed or are in the process of developing product packages to enable our subscribing accountants, bookkeepers, and business advisors to be able to deliver those services to your SME clients without you having to take hundreds of hours in developing your own. You can do that, of course, but it's going to take you a lot of time. I know. You sat down to develop what's in ESS BizTools. So hopefully that's given you an overview of this particular area. As always, if you have any questions, comments, criticisms, please send me an email, peter@essbiztools.com.au, or you can pick up the phone and make a call to me, 0418 190 181 will get me. Have a great day, and I look forward to talking to you again next week. Goodbye.